All right, guys. Today we've got Ken MacLeod with Sonoro Gold. So, Ken, go ahead and take it away.
Thank you very much, Matt. And thank you, everybody, for joining today. I see some faces that I know quite well and new faces as well. So I look forward to getting your feedback as we go along here. Okay, so Sonora Gold, Cerro Caliche Gold Project. It's one of two projects that we have in Mexico. The other one is the San Marcial project, which is still early stage. It's ready for drilling, and we will be drilling this year. But we'll focus our conversation today on the Cerro Caliche project. We, of course, will be talking about some future events that we hope to bring to bear over the coming year or 2 years. And so forward-looking statements are important here. So we have a team in Mexico that I consider to be one of the finest in Mexico. And we've been long residents of Mexico as far as our team is concerned. I'll start off with the two principles of the company when it came public in 2011. One is Mel Herdrick, and quite a few of you will recognize Mel. He was head of exploration Mexico for Phelps Dodge for years. And then he became the head of exploration for Pediment Gold when they assembled a suite of projects in northern Mexico and developed two major discoveries, which would be the La Colorada, which is turned into the La Colorada mine, and San Antonio on the Baja Peninsula, which between the two of them, you were at 3.5 million ounces in total. And of course, you may know the history of San Antonio. It's held up in permitting and may be permanently held up in permitting. But La Colorada went into production, became the main project when Pediment was taken over in 2011. And Argonaut took it over, and the shareholders of Pediment did really well from that transaction. His partner at the time, and when the company was assembled between 2008 and 2011, was Jorge Diaz. And Jorge is a mining engineer, 50 years experience in building and designing, building and operating mines in Mexico. 6 years ago, he set up his own private mine at Quiriego, which is 3 hours drive south of Hermosillo. And Jorge is very much of a hands-on character, and he's the guy that's pushing the development of the Cerro Caliche project. And so a very, very good person to have on board with us. Then at the top of the list there, you have John Darch. Many of you will recognize John. He's been in the business 45 years, all the way from dealing with Crew Gold, Crew Developments, Asia Pacific Resources, and raised millions and millions of dollars, hundreds of millions of dollars over his term as president or chairman of the various companies. He's been with Sonoro since 2018, and John and I work very, very closely together. We typically tend to split responsibilities with some overlap. I look after the technical side, and John looks after the market and the marketing side. And my own background is mechanical engineer to begin with, and then got into the resource sector in the early 80s in oil and gas. I've been in oil and gas in the United States, in the Philippines. And then I got into mining in the Congo in the 90s, developing SXEW plant in the Katanga province in the Congo until the Civil War put an end to that. And I came back. John and I set up a renewable energy company called Western Geopower in 2002, and developed a project in the Geysers Field north of San Francisco. And that project was the subject of a takeover or a business combination in 2009, which enabled me then to move on to set up a private company in the Philippines to develop renewable energy, including a 600 megawatt dam, which sold the company in 2014. Became CEO of Sonoro at that time, and it's been my sole focus ever since. And one more person I want to bring up to your attention is, of course, Oscar Gonzalez. Oscar's 25 years experience in the district. He's been working on Mercedes mine, even back in the days when it was Yamana Gold's project. He's been working on the Cerro Caliche project with us now since 2018. He's worked on the neighboring property that we just recently acquired, and what we call Acuñalandia. He's worked in the area of the Santa Gertrudis as well. So he's very well documented, that's very well experienced in the region that we're operating in. And he's leading the charge right now with the drilling program. A couple of things I should mention before we go much further. Of course, the company is trading on the TSX Venture Exchange under the symbol SGO, and has been since about 7 or 8 years on the OTCQB under the symbol SMOFF. And it's also trading on the Frankfurt Exchange and the various German exchanges as well. Number of shares issued and outstanding at this point in time is 431 million shares, of which the insiders own approximately 28%. And obviously, as you can see on the list here, we have a series of warrants that expire anytime from later on this year until 2 to 3 years from now. And of course, when you exercise all these warrants, it's probably going to bring in the order of about $50 or $60 million as time goes by. I have listed, and I'll be posting this on the website for you, or certainly I'll provide Matt with a copy of this that he can share. But I've listed the expiry dates on the warrants in this slide here. So if anybody has any questions on this at this point in time, I'd be happy to answer them. Nothing yet?
Yeah, please just keep going, Ken. Thank you.
Okay, I'll keep going. Location-wise, we're in Sonora State, northwestern Mexico, bordering on Arizona. And Sonora, of course, as most of you are familiar, 25% of the GDP is related to the mining sector directly. And we've got probably over 200 mines in total in Sonora State. The economy of Sonora is highly reliant on the mining industry. And of course, you haven't seen any new projects being approved or built in Sonora in the past 7 or 8 years because of governmental policies. Now we're starting to see a trickle of projects going through the approvals process. And so the daylight is already starting to shine a little bit in Sonora. We have a lot of support from the government of Sonora to get this project to production. And so we're surrounded, I'll go back to this slide here. We're surrounded by producing or soon to be producing mines. So first would be, if you look at the gold star, that is our Cerro Caliche project. And about adjacent to us on the west is the Cerro Prieto mine. To the north is Agnico's Santa Gertrudis project, and we're actually abutting it now with our extended reach to the north. And to the southeast is the Mercedes mine. Highland Silver now controls that area. So we are in good company there. And the second project is the blue star that I'm showing on here, the San Marcial project. So going on to the area near Magdalena de Quino, which is the hub of commerce in that area of Sonora State. Magdalena is on the top left-hand corner, and it's about a 45-minute drive, half-hour drive actually, to Cocurpe, and then about another half-hour to the Cerro Caliche project. To the north, as you can see, is Santa Gertrudis, and to the southeast and to the east is the Mercedes mine property. The area is actually very benign from an environmental perspective. The project itself is an oxide deposit. We have drilled down as deep as 250 meters, and we're still in oxide. So at this point in time, even if there was any issue with the water in the area, we're in oxide, so we don't see any potential for conflict in that area. The nearest aquifer is the San Miguel aquifer, which comes through the arroyo, which is about 8 kilometers to our west. And we have right now an application in for registering 300,000 cubic meters of water per annum in that area there. So we'll be drilling there fairly soon as well. Other issues are there's no habitation anywhere near us except for a few ranches, and two of the ranches are the subjects of our long-term leases, our long-term surface rights, and the exploration rights as well. And from the Cerro Caliche area to the Cucurpe, once again, there's no human habitation whatsoever. The Cucurpe people we had our environmental team do a study in 2022 when we were completing the environmental review. And they went and they surveyed the 842 population of Cucurpe. They used 250 of these people, all adults, male and female, and they asked the question, do you support a new mining project coming into your district? And the answer was 98% in favor. So we're quite happy that we have the full support of the neighboring people as well. So that we started off in 2018 with the area shown in blue here, Cerro Caliche concessions, 1,350 hectares. Now, this area here has been mined intermittently over the past 200 years. So it's not that we're going into a pristine area. There has been probably, I would say 15 to 20 small-scale mining activities taking place on the Cerro Caliche concessions over the years. So we acquired that, and the initial payment was for approximately $5 million, which we paid in order over a 4 to 5 year period. And so it's fully paid for now. So at that time, we were quite happy. We went ahead and started the exploration program. A combination of RC and core drilling was done, and we were happy with the results. So then at the time came in just a few months, this time last year, and we were sitting, and it was time for us to increase our presence there by going from exploration surface rights to mining surface rights. So we went ahead with the rancher whose land we're sitting on, the Cerro Prieto Ranch, and we said we need to negotiate the surface rights for the Cerro Caliche component. And he said, you can have the surface rights for the entire ranch. So as a result, we were able to secure a 25-year surface rights agreement with the rancher for the entire area, the polygon that's shown in black here. Now, it does cover the area which is currently the site of the Cerro Prieto mine, and they have just over 1,000 hectares that they have the surface rights on until August the 31st of 2028. On September the 1st of 2028, we will become the landlord. So if they want to continue mining on there, which I hope they will, then we will become the landlord, and we will be taking the surface rights agreement and hopefully benefiting from that. So fast forward now to this year, and just a few months ago, we went from the original Cerro Caliche area that is shown in yellow here. And by the way, just to give you an idea, the red squiggles you see on the yellow area are vein structures that we've mapped at surface, and they're mineralized. So we have a plethora of targets on the Cerro Caliche project. And with the drilling that we've done to date, we've only actually drilled less than 30% of the known mineralized zones in the property. So we have a lot of work still to do within Cerro Caliche itself to be able to fully define the value of Cerro Caliche. But going forward now to a few months ago, we acquired the area that's shown in blue here. And what's interesting is part of that area, of course, comes within the domain of the Cerro Prieto Ranch, the black polygon. And so we already have the surface rights to that area. Now, this area to the north has been the subject of some exploration and some mining over the past decade, starting off with the Batomote mine. Our neighbors to the west, the Cerro Prieto mining people, went ahead and secured an agreement for the Batomote mine and the area to the north here. And they started mining back in 2018. And then when it came time for renewing the lease after 1 year, they decided that they would back off, and they didn't have the money to make the lease payments. So they relinquished the concession, and to our benefit now, obviously, because that area is somewhat higher grade, quite significantly higher grade than what we had experienced in what's already a good project at Cerro Caliche. So we've got data from that area where the operations had taken place. And another project that it's not shown in this map here, but the little bite you see on the right-hand side of the screen, that is the Diana property. And we'd been negotiating with the Diana owners way back in 2018. Couldn't make a deal back then. And finally, as of 2 months ago, we closed a deal on Diana. Diana has been the subject of a drilling program, I would say about the early 2002, 2005 range. And it was a series of, I think it was 42 holes that were drilled, which demonstrated good mineralization. And we have the benefit now of owning that material, that data. And the goal, since it was not done in a 43-101 compliant manner, we can still use it, of course, as reference data, but we are now about to embark on a drilling program at Diana and the Batomote mine area. We have one rig currently operating in the western part of Cerro Caliche itself, and the second rig will be coming on site within the next 2 weeks, is my understanding. So then we were up to 4,000 hectares with the yellow and the blue parts of the concessions. And then we had the opportunity to sit down with our neighbor to the east. So here we have the original Cerro Caliche property, 1,350 hectares, and the extension to the north and little extensions to the south. So we're up to 4,000 hectares. But over the past few months, it became evident that the rancher next door to us, Emilio Acuña, was interested in sitting down and talking to us. He had a potential offer from a major mining company, but he wanted to deal with us. And so we decided that we would do our due diligence, and we spent several months looking at the data there. Now, our geologist, Oscar Gonzalez, had spent several years working with Acuña. So he had an intimate knowledge of this district here. So we went ahead and we put together an agreement where we would acquire pretty well almost all of his concessions, all of Acuña's concessions. And the areas you see in red there are the fruits of the initial agreements that we signed on a letter of intent about a month ago or 5 weeks ago, and is now being converted into a formal agreement. And that amounts to a grand total of 5,000 hectares of what you see in red, and the reds of the areas down below there, and the orange as well. And so the way we structured it is we're acquiring 100% of the areas in red, and payments over a period of 6 years. And then the area in orange was an area that the rancher had been working on for the past 20, 25 years. And there's a significant amount of drilling and surface work that's been taking place in that particular area. And he wanted to put in production himself. So we struck a deal where we will provide up to $9 million of drilling or exploration or development, for that matter, over the coming 4 years in order to obtain a 51% interest. And at that point, we have the option of either buying them out or doing a joint venture to develop the project all the way to production if necessary. So that's what we have achieved to date. There are other areas where the blank area in between the northern area of red and the central area of red there. We're working on that. Over time, I believe that we will secure that area as well. So all in all, right now, we have 9,000 hectares, heavily mineralized throughout. This district here is underlain with the metasedimentary rocks. So we've got northwest trending vein structures that are multiplied right across the entire concession from from the western part of Cerro Caliche to the eastern part of the Acuñalandia in red there. And they reach way to the north as well. So if you look at where the Mercedes mine is, it's not really shown very well on here, but these trends come through the Mercedes mine area, and you can visibly follow the vein structures from Mercedes mine through the Acuñalandia and through the Cerro Caliche concessions quite distinctly. So it's been a good exercise for us to secure this land to the east. And we believe that we've now gone from, originally we postulated that Cerro Caliche by itself could host up to 3 million ounces. We still believe that that is the case there, the yellow area. Now, what's the potential for the areas to the north and the areas to the east? I think it's multiples of that. So feel free to ask questions afterwards on that. So as of, I think it was about February, we announced the initial results of the PEA. And the results were based upon an initial almost 800,000 ounces of mineable ounces, which when you start optimizing, then you with a 72% recovery rate for the gold, 27% recovery for the silver, then it measured and indicated totaled in the order of about what was it now? It's 650 approximately, and then just under 100,000 ounces in the inferred category. So if you look at the table on the right there, so the basis of the PEA was, recovered ounces would be in the order of 458,000 ounces. And they used a gold price of $3,500 and a discount rate of 8% in their calculations. The initial capital costs of $83 million include $13 million for contingency. And some of the major components are the crushing and the conveying system. So you're up to about $33 million for these systems there. Initially, we had planned to use trucking to a great extent to cut down on the initial capital costs, but we figured that the economics of putting in a conveyor belt would more than pay for itself in the first year and a half. So on that basis of, like I mentioned, at $3,500 gold, the cash cost per ounce became in the order of $1,800. Now, there are areas within the pit shells and surrounding the pit shells that we are now focused on converting into mineralized material. So can we cut down on the cash cost per ounce as a result of consolidating these areas into productive material? And the answer, I believe, we're going to have a significant impact on a cash cost per ounce after the next round of drilling is completed. And the AISC is $1,900. So the way we designed the initial mine plan was we've got very close to 800,000 ounces mineable. Initial life of mine will be in the order of 10 years. And we went ahead and we filed the MIA, or the environmental impact statement, to get approval to build that mine. But that's always been our philosophy. But we were looking at gold that went over $5,000 recently, and we thought we're missing out here on a bit by not drilling at this point in time. So we went ahead and secured funding in the order of about $27 million in the past 3 months. And so we started this drilling program in order to have a parallel track. So the shareholders will now have the opportunity of benefiting from us proceeding with the MIA approval, which will eventually, in my opinion, happen over the coming months. I can't pinpoint exactly when, but at the same time, we're going to have lots of news from the drilling program. And we started drilling about 3 weeks ago, and it's now taken about 21 days to get the results in full. And so we should be starting to see the results dribbling in over the coming week or two. I'm happy to share that when the time comes. So to summarize on the $3,500 gold base price, the net present value, it discounted 8%, as you can see, after tax is $224 million, before tax $360 million. Now, obviously, over the coming 2, 3, 5 years, maybe, we're not going to be paying a lot of tax because we're plowing the profits back into additional drilling and expansion. So what happens is once we have secured the MIA, then of course it's going to be approximately in the order of about a year, 13 months from that point before we start generating cash flow. So in the meantime, we will have developed we'll develop the mine, and the throughput at this point, as we see it, is in the order of 16,000 tons per day. But the mining plans have been designed to actually, without any new equipment, be able to increase to 21,000 tons per day. Now, the 21,000 tons per day will still need one additional crusher, but that's it. So it's very easy for us to upgrade to 21,000 tons. And by the time, of course, we get the MIA and we get the construction completed, we hopefully should be looking at a much, much larger resource at that point in time. Now, the larger resource, how does that translate into the benefits for the shareholders? Well, we can scale up the size of the mine. Obviously, there are areas within the property where maybe a secondary a pit shell, maybe there might be 2 or 3 open pits that would feed the mine. We've designed the leach pad to be able to expand substantially from its current configuration. So we feel that once again, by the time we get into production, the size of the resource will become significantly greater. And as you can see here, it's very dependent on the price of gold, and see the price of gold at today's price of $4,100, $4,200, still very robust, as you can see. So the mine plan as it's designed today and is actually being reviewed by SEMARNAT, the environmental agency, is on the basis of the open pits that you see in the bottom right-hand corner of this map here. And as you can see, there's lots of gaps in between the actual pit shells, and even within the pit shells themselves, there's gaps, which we believe are highly mineralized. In fact, you can't see it in this map here, but we mapped out the mineralized zones in between this area, between what we call Cabeza Blanca and Buena Suerte. And we've been drilling there for the past 2 to 3 weeks. And the goal is to convert this into one larger open pit and be able to have zero waste in this particular area. So from you drill and blast in the pit shells here, you truck to the primary crushing to the north. From there, it's taken the ore is taken to the second intermediate and tertiary crush, and from there it goes by conveyor belt again to the leach pad area, and the grasshoppers spread it out there. From the leach pad, of course, you sprinkle sodium cyanide. You've got the containment system underneath, and goes to the desorption process area. And the ultimate goal is to produce a doré bar, which is then shipped off for final refining. There are areas to the north here that are not included in the resource estimation, such as this area here that I'm showing at this point. That's the El Rincon zone. And that will be added at a future date to the resource. And the area to the north of Rincon, we are getting into a very heavily rhyolite zone area, where the Cerro Caliche peak is just to the southwest of the north arrow here. It's a rhyolite dome, and the area is underlain with a rhyolite sill throughout here. And we're finding significantly elevated grades of gold and silver associated with the rhyolite. So the area to the west here, the leach pad area, is expandable. And so right now it can certainly accommodate up to 21,000 tons per day with a little bit of additional expansion. It can probably double in size. Here's a map of the drilling we've done to date. There's a grand total of 55,000 meters of drilling. Prior operators, such as Corex, had drilled somewhere in the order of about 12,000 meters of drilling in prior years, but is all 43-101 compliant. And it enabled us then to start up our drilling program with the advantage of knowing where the mineralized structures are the low-hanging fruit would be situated. So we did that, and we drilled 44,000 meters ourselves. So now we have a grand total of 498 drill holes in total. And that's enabled us then to give a clear indication for the environmental impact statement that this area is capable of supporting the near 800,000 mineralized, or the 800,000 mineable ounces at this time. Some of the other things that I want to emphasize, area to the southeast here, the Española, is higher grade as well. We are going to be focusing on that with the current drilling program and maybe going a little deeper because we have indications that this is a prime target for significantly higher grades as well. This area to the west is where we intend to do the initial mining. This one is called the Cabeza Blanca, Guadalupe, and Colorado, and the average grade there is definitely approaching 1 gram, whereas the average grade throughout the area is under half a gram. Section AA in the bottom left hand of your screen, and section BB is where we intend to do the initial mining. And as you can see, it's for good reason. You've got down the bottom of the arroyo here, you have 27.5 meters, 5.5 grams, including an intercept of 50 grams, at 50 meters of 46 grams. And you've got good grades, good high-grade clavos, as they're called in Mexico, all the way up the 500-meter section of this Colorado zone. And this is taking the first screen of the extension of the Guadalupe vein structure, and behind it is a similar row of high-grade ore shoots on the Cabeza Blanca extension. And as these extensions continue to the north, and this is the section across Cabeza Blanca and across the Guadalupe zone. And as you can see, very good high-grade intercepts all throughout. The whole structure here at Guadalupe is continuing into the southern area is over 1 kilometer in length, and Cabeza Blanca is well over 1 kilometer in length as well. And one of the reasons why you see a potential for going deeper here is that when we started drilling at Cerro Caliche, we made a conscious decision to demonstrate the validity of a low sulfidation epithermal system near surface oxide deposit that we could open pit mine, and we're not going to take the risk on going deeper at this point in time until we fully determine that the risk has been mitigated and we have the money to do so. So now the next phase of drilling, you will see us undercutting this substantially in order to determine whether these two vein systems coalesce at depth. And so stay tuned in that regard, because we should be starting to get results within the next month on the potential for going deeper here. Is there a potential for actual underground mining here? The answer is absolutely yes. It's a hilly part of the world here, and you could actually enter these high-grade vein structures with a horizontal adit. So once again, I'm going to show you this structure here, 3CC and DD, just to give you an idea of how easy it is to mine. Strip ratio, according to the recent geological report, and the PEA is 1.6 to 1. And I believe that we're going to get that down substantially as we continue to drill between these vein structures. So you have the vein structures, higher grade, and you have the stockwork in between the various vein structures, and disseminated gold is in between as well. Once again, easier to mine. So now this is a program we're actually working on today. The green area down below here is the area where we've done the extensive drilling over the past few years. And this is where the pit shell is situated at this point. So that's where you have your 800,000 mineable ounces currently. And this now is the subject of the first drill rig that we put on the site about 3 weeks ago. So the idea is to infill and expand the pit shells within this area. The second drill rig will be going into this northern area here, the Diana concession area and the Batomote area. And the goal for that, of course, is to start demonstrating the higher grade vein structures in these areas as well. So that will occur, I would say, with probably 2 weeks from now, we'll have that second rig on board. But as you can see here, there's 50,000 meters of drilling that we've got planned here for this entire area. So over the next, I would say, we've got 2 rigs up. We'll have 2 rigs operating starting in 2 weeks, and so by Christmas, I think we should have this 50,000 meter drilling program completed. And we still haven't touched the area to the east because we're studying the data from 25, 30 years of exploration on the area to the east, and then we'll make a determination as to how we're going to proceed with drilling to bring that forward to a mineable resource as well. Some of the areas, this area to the north, this is the Rincon zone at the north end of Rincon here. We just happened to be doing some work in the area a couple of weeks ago, and took some shots of visible gold there, which is pretty. And so let's assume today that we get the MIA, the Environmental Impact Statement, approved by SEMARNAT. I would say that 13 months from that day, we'll be pouring the first doré bar. And as you know, a lot of you are experienced in mining in Mexico and open pit and oxide deposits. And there's no magic to building an open pit mine. The biggest single item would be the building the leach pad, making sure that the foundation of the leach pad is secure, the foundations for the crushers are secure, and you build your crushing system and your conveying system. So the other project, the San Marcial project, is about 30 kilometers to the south of Cerro Caliche, but it's a lot further by road because you have to go to the San Francisco mine almost and then head east. So I'm looking forward to drilling that this year. We're getting the drilling permits underway at this point, and that should be another feather in our cap going forward. So to summarize, we have a team that's been in Mexico for up to 50 years and operating in Mexico very successfully. The project. Okay, so we've been working on the project on the Cerro Caliche now since 2018. And now that we've expanded from 1,350 hectares to 9,000 hectares and a potential for going even further, I think we've got the heart of this brand new mineralized zone that had been sort of mined on smaller scale basis over the past 200 years, but the mineralization in the main is still intact within the project area. We have, as insiders, about 25 to 27% of the issued and outstanding shares. There's another great following in Germany of about 30, 35% that has been with us now for, ever since we started working on Cerro Caliche, working on Sonoro back in 2014. And our business plan, once again, I want to emphasize that we didn't drill and then go into going towards production on the basis of strictly that's all we have, that's all the mineralization we have. The answer was no. It was to get into production, generate cash flow, and use that cash flow to finance ongoing exploration and to mitigate against dilution to the shareholders. But we certainly at this point in time, we figure I think it's worthwhile at $4,500, $4,200 gold to get into raise some additional capital in order to take advantage of the robust gold price. And so combination of those gives the shareholders a double incentive to get involved with us. And over the past, over the past year or so, I think we've raised probably close to $51 million approximately. But in the past 3 months, it's been about $27.5 million. So that brings me to the end of the presentation. If anybody wants me to go back to a specific slide, I'll be happy to do that, or else well, I'll open it up to the floor.
Great. Thank you, Ken. Brian, you're first. Go ahead.
Yeah, thanks. Hey, Ken, good to get an update on this. When we first started talking so many years ago about this, it was a small scale, low grade, low capex, get into production, as you mentioned, and then expand. And so, congratulations on taking advantage of this market to really start that expansion before you got into production. So especially the financing over the last few months, I just think that's really been transformational and really changed the story, at least for me. But the part of that original plan was that you could get into oxide gold production with relatively low OPEX and low AISC. And I know you mentioned it a bit, but could you go into more details on where that relatively high OPEX and AISC comes from? Because your strip ratio seems awfully low for that. And frankly, I would have expected it to be a bit lower than what it is.
Yeah. Well, here's we started off back in 2018, and by 2021, 2022, we became victims of our own success in a way. We were so successful with the drilling program. We wanted to start off at 3,500 tons a day and get approval for that and then build up from that point onward. But by the time we had drilled a grand total of what was it now, almost 50,000 meters, the resource had built up to the point where there was no point going into production at 3,500 tons a day. And we then showed, okay, we can go into production at 12,000 tons a day. And so we filed the MIA on the basis of 12,000 tons a day. And the capital costs were kept to a minimum because we were going to be using trucks for hauling the ore. At that time, there was no intent to put in the conveyor systems. And so the total capital costs at 12,000 tons a day were reflected at around a total of about $32 million US, of which 50% would be paid up front. And then the balance would be coming out of sustaining capital. And that was a good idea at the time, until we started looking closely at the most recent results and the fact that we're now going to 16,000 tons a day. And we'd be throwing money away if we continued to use trucks over the first few years in order to move the ore to the crushing system. So that started building up the size of the capital costs quite dramatically, because when you go into the conveying systems, I mentioned that the cost right now, as it stands today, is in the order of about $33-35 million for the crushing system and the conveying system. But on the flip side of that equation, the payback on the conveying system is less than a year and a half. So we decided, okay, let's bite the bullet. Yeah, there's going to be a higher capital cost. And the other thing was the leach pad itself is about a $12 million expenditure. And once again, back in the glory days when we were looking at the much lower capex, the leach pad costs up front were in the order of about $3-4 million. But now, with the leach pad has expanded dramatically, it's double, almost triple the original size. And instead of, we'll do it in increments. Yes, we built the initial part of the leach pad for the first 5 years, and then out of cash flow, we'll pay for the next 5 years after that, and so on and so forth. But that added to the capital costs. And we also have found that the costs, equipment costs and crushing costs, the crusher costs and the and the leach pad liner, everything has gone up at least 25-30%. Could even be more.
Yeah,
So
but Ken,
that added to the overall capital costs quite
yeah,
substantially.
but Ken, I was referring, I'm sorry, more to the OpEx, operating costs. And actually the CapEx seemed fairly low to me. It's like 89 million or so.
It's 83 million, of which 13 million is contingency.
Yes, that seems, very doable, especially in this market. I was really concerned about the operating expense and the relatively high AISC once you had the mine built.
Yeah,
Cost per ounce.
cost per ounce, it's 90, at this time is $1,900. And can we get that lower? The answer, I think, is a resounding yes, because if we are able to convert a lot of that sterile material within and surrounding the pit shells into mineralized material, then we're going to see both the cash costs and the AISC coming down. As far as the getting, I don't think we can get the AISC down much further except by optimizing the mining process. I don't think you're going to see them coming much below, $1,900 or $1,800. So at this point, once again, the other thing that I think we should pay attention to is what kind of grades are we going to get with the next phase of drilling, this phase of drilling that we're working on right now. If, as I'm saying, and our geologists are saying, that the area we're going into in the northern part of the concession to the northern extension is significantly higher grade than what we already have and what we're already happy with, then you're going to see the AISC coming down dramatically in that basis. If indeed Batomote and Diana and that entire area to the north, underlain with the rhyolite, is if it's as prolific as far as grade and mineralization is concerned, I think you're going to see a significant impact on both the cash costs and the AISC.
Okay, thank you.
Okay, thanks, Brian.
Thanks, Brian.
Brian Lenny, go ahead.
Thanks, Matt. Hi, Ken. I don't know if I
Hi,
missed
Brian.
it on your cap table, but how much cash do you have right now?
Today, we just made a property payment for the surface rights that we secured last year. We had a $5 million payment to make just this past week. So it's done. That's USD. So we have $11 million sitting in the treasury today.
And how much will that two-phased 50,000 meter program cost you?
The interesting thing with the drilling is the cost per meter is $100 all in.
Okay.
So you're looking at 50,000 meters of drilling. That's $5 million US.
Okay. And the other question is about the warrants. That's a significant amount of warrants that are out. What portion, do you know who holds those warrants? Like, do the insiders hold 30% of those or 25% of those warrants? Because I guess the concern for me would be is how those come out over the next couple of years, because it can be a cap on share price in the wrong scenario.
Good observation, and I agree with you. That's why we're going out there on a daily basis and prodding the people that have these warrants, get them exercised. It's for the benefit of the company and enables us to get secure financing at a higher price. So we're working on it. Do we own 20% of the warrants? We own, I would say, somewhere in the order of about 15 to 20% of these warrants. And we as insiders have been exercising whatever warrants that we had in the lower categories. We've been exercising all along. So I'd say right now we're working on some of the larger warrant holders just to get them to exercise as soon as possible. And it's a daily chore for us to do.
Okay. Thanks, Ken.
Thank you.
Okay, all right. Brent Cook, you're up.
Yeah, good day, Ken. It's been a while.
It has been a while.
I guess I'm curious about these pits. How many pits are you actually looking at in this first phase oxide heap leach?
Well, yeah, good point. Right now, if you look at the pit shell outline, there's about 3 distinct pits with very little space in between 2 of them and a larger space of close to 500-600 meters between the 2 western pits. And that's why we're drilling in that area at this point in time, to try and have them coalesce into one large pit. So at the end of the day, I would say this is going to be one very large pit shell. And the reason I'm suggesting it is we're going to go deeper. When you look at the drilling program that we're engaged in now, we are going deeper. So if you look at the average length per hole in the original drilling, it was 110 meters, 45-degree dip. So now we're an average of 160 meters length of hole at a 45-degree dip. So the true depth is now over 110 meters. So we are going deeper, and of course, with the deepening, you're going to see the enlargement of the pit shell and deeper pit shell as well. So these 3 distinct pit shells will coalesce into one larger one and keep expanding from there.
So you're actually finding mineralization outside of what you've drilled into the hanging wall, I guess.
Yeah, we are. We are. Now, some of these areas, of course, are lower grade in between, but they're mineralized. And if we can convert it into, instead of going to the waste dump and have it go to the crusher, then it's a win for us.
And your cutoff grade for the resource is what?
The original cutoff grade was 0.2. Now we're at 0.17 grams.
Okay. I guess the last question, you've raised what, 27 million in the past 3 months. You're down to 11. Who put the money in? Are they going to put more in? I mean,
Yeah.
are there any big institutions or investors or?
That's the idea. We're right now, we sort of, crossed the bridge between, we were self-funding to a great extent over the past few years. And John Darch and Jorge Diaz and I were always going into our pockets to make up for the shortfalls and when property payments were to be made. Now we've got a more finite and more stable institutional type investor backing us up, and with the idea that they'll be with us going all the way through and taking this project through to the natural conclusion. And that, in my opinion, is either going into production and turning into a small producer and building it up from there, or what may delight to some of you today would be that we're always open at some point for the company to get taken over by a larger company. And so if we work on the premise today that we go into production, and we have that ability, our team has done so many of these projects and taken them to production in years gone by. We'll do that. That adds value. But let's complete this 50,000 meter drilling program, see what kind of increase there is in the size of the resource, and more importantly, the grade. And then we can look at it and say, do we continue with another round of 50,000 meter drilling? Or would it be attractive at that point for a larger company to take it over? I believe that, my own personal feeling would be that I'd like to do another maybe 100,000 meters of drilling to fully define the value of this project before anybody takes a look at us. But that will not be up to me or the directors of the company.
All right. Well, thanks a lot and good luck.
Thanks, Brent.
Okay, thank you, Brent. Graham Summers, you're up.
Hey,
Hi
Brent.
there. Nice to meet you. I apologize if I missed this. Did you go over the share structure of insiders and institutions already?
I did. Let me summarize then. What did we say? 450 million shares. I'll just go through the notes here because they just changed recently with the recent financing. And we have let's see, 430 million shares issued and outstanding. And 27% are held by insiders. It used to be 30%, but in this most recent financing is 30% of the financing we took down, less than 20%. So that summarizes that. Warrants, we have less than 20% of the warrants that are outstanding there. And we fully intend to exercise the balance of the warrants that we currently hold at this point in time. And we're working with people on trying to get everybody to exercise the warrants.
Excellent. And then I guess the final question would just be, what do you see as being the sort of biggest near-term catalyst for potential repricing of shares?
Yes. Well, there's two, as I mentioned before. The one, of course, get the MIA. We have been struggling for years with the Mexican government to get the MIA approval. Of course, back in the old AMLO days, nothing was being approved. But now, of course, since Claudia Sheinbaum has become the president, things have changed. And we've seen at least 120 mining projects being approved, not new open pit heap-leach mines yet, except for the recent days and recent months. So back in November, you saw the approval for the El Tigre, and Silver Tiger got their approval to build the open pit at El Tigre. And recently, of course, Gold got their approval for the underground part of their mine as well, and they're still working on getting the approval for the open pit part of the mine. But it's heading in the right direction. And for a long time, I can assure you, there was no communication between us and SEMARNAT during the AMLO years. There is communication now. There is interest and a desire to get the approvals for the open pit mine. And so the questions that are being asked are what any self-respecting agency, environmental agency, would ask, whether it be Canada, the United States, or anywhere in the world. And they now, this is now being employed by SEMARNAT. And a lot of it has to do with the communication between the Mexican Chamber of Mines and the Canadian Chamber of Mines, the Mexican government and the Canadian government. There's been a sharing of environmental data, environmental regulations that are now being, should I say, thrust upon us. And so we have to meet a higher standard than we've ever had to meet in Mexico before, and which is very comparable to the kind of standard that we have in Canada and the United States. So I don't have any objection to that. But as long as we're heading in the right direction, and we are, there is an intent and an interest on the part of the regulators to get these open pit mines approved, because it's imperative for the economy of both Sonora State and the economy of Mexico to get them approved.
You're saying there are two catalysts. That was the first one. Ken, what's the second catalyst?
Let's see what we come up with 50,000 meters of drilling. That, a lot of people are waiting with bated breath on that one, including me. And so I would say that given me between now and Christmas, like I said, we should have that 50,000 meters all put together, and we have the results from that. And I'd be surprised if anybody's going to be unhappy with that.
Thank you. Appreciate it.
Okay,
Thank you.
great. Thanks, Graham. Gary, you're up.
Okay, staying on that topic, first of all, Ken, appreciate it. Nice to meet you, and that was a really good presentation. Staying on that first catalyst, it's taken a long time in the jurisdictions that you're in and around, and things seem to be moving better. But if that catalyst is slowed, it would slow an upward re-rating. And so first question would be, what is the plan to mitigate that in the event that things don't move as quickly as you would hope? And secondly, the market seems to be valuing the in-ground gold you have at about $50 versus $85 for the sector average, even as you've refreshed funding, moved deeper into project advancement, and you have several surrounding mines and a lot of infrastructure. Why do you suppose that the market is currently valuing the in-ground gold significantly below the sector average?
The Mexico factor. And it's simply because the Mexican government still has to demonstrate that it's fully behind the new open pit mines. But I would say that the concern would be real if this was the same time, say, 2-3 years ago. But now the fact that the Mexican government is reaching out and cooperating with us and is providing us with feedback to the filings that we make and coming up with ideas and supportive in many, many ways, suggests to me that the Mexican government recognizes that the value of open pit mining is tangible and will make a huge difference to the Mexican economy. And so I believe that the general market and the investing public have not fully realized how determined the Mexican government is to make it work. But it's not making it easy for us. They're bringing in environmental regulations that were hitherto unheard of in Mexico, were commonplace in the United States and Mexico and in Canada. But now they're extending that into Mexico as well, which I find is just perfectly fine because we can meet those environmental regulations. And we're proceeding right now with our environmental filings to make sure that we do adhere to the highest standards. And so I would say, it's going to take us probably another 3 months or so to really get a final definition on whether we have met these higher standards. And I believe we will attain that higher standard between now and November.
Yeah, I appreciate that answer. If the MIA is delayed, why would now still be a favorable entry point though for investors?
Because we're going to continue with the drilling program. This 50,000 meter drilling program, I believe, is going to cast the project in a totally different light. Up until now, we've been talking about half a gram as an average for us. And if we are able to demonstrate in the northern area, in the rhyolite zones, that the grade is significantly higher, I think it's going to be a catalyst for many more eyes to be brought to bear on Cerro Caliche and Sonora. And all indications are that the areas to the north and the newfound areas to the east, the newly acquired areas, what we call Acuñalandia, are going to have significantly higher grades as well. And once we compile the data of 35 years of exploration on the Acuñalandia part of the concession now, then I think we put in a drill rig in there and start to come up with some significantly higher grades. And it's some, Mercedes mine is a good example of higher grades in the district. But Mercedes mine is 350 meters below surface. Well, if we can start to demonstrate some of these higher grades at or near surface, or even down to 100, 150 meters at Cerro Caliche and Acuñalandia and the extension to the north, then it will be a game changer for Sonora, because at some point it's going to become even more attractive to outside parties.
Thank you, Ken. Appreciate it.
Thank you.
Okay, Lawrence, please go ahead.
And I need to keep harping on this. I know you already answered it several times, but the permitting is a major issue. It's very exciting that you've got a genuine near-term production situation, and realize the gating is the permitting. And I know you can't give a timeline on it, but a general question: is there anything specific in terms of legislation or formal policy that would have to change, or is it just a continued evolution in the policy?
I think, Lawrence, that it's a continued evolution in the policy. They're trying to come to grips with what's going to work for Mexico and the mining companies in Mexico, and they're being briefed. They are being coached by the Canadian government, and so I would say at this point that they're trying to apply these, so I call Canadian environmental standards to the Mexican situation. And, they're trying to implement it in a way where they're assuring us that they're working on it, but they can't give us an exact date as to when it's all going to be implemented. But we were expecting it to be implemented a year ago. And Fernando Aboitis, the head of mining, the head of extractive industries in Mexico at the PDAC last year, just over a year ago, stated he expected these environmental policies to be in place by the summer of last year. Well, they're still working at it, and it's being implemented slowly. And when you see Go Gold getting their approval, that's a good sign, because these policies are being implemented in these new approvals. Same with Silver Tiger as well. These new environmental policies are being implemented. So it's an evolution. I think your comment about evolution is right on the numbers.
Okay, and given it's Mexico, defining a timeline is very, very difficult, of course, but is it going to be a few months or is it going to be a year?
I think a few months, and from my perspective, because I'm getting feedback now that I never got before from the regulators. So I would say that they're serious. They have a mandate to go out there and get the approvals done, but get it done right. Don't cut corners, get it done right. And I believe that we will be successful. And so, like I said, months as opposed to years, in my opinion.
Okay, great. Thanks. Best wishes.
Okay. John Hunt, go ahead.
Yeah, hi, Ken. That was a great presentation. I enjoyed it thoroughly.
Thank you.
Good opportunity to see you in person. Palisades has been a supporter of yours for some years, if I recall, and probably took a big position most recently. Are they included in your insider listing of 27%? Or are they still outside that?
They're outside of that.
They're outside of that.
And the 27% has always been just strictly the insiders. It doesn't include our families. It doesn't include employees that may have shares in the company. So I would say the more realistic position would be 30%. Palisades now self-declared last week, I think, as insiders. And so if you want to add them to the mix, I think I'm not too sure exactly what the total number is, but that would bring it up to maybe 35% in total. Again, they're under 10%, I know, as Palisades, but so you add our 27% plus they're under 10%, so we're up to, if you classify us all as insiders, about 37%. And they're in there. I believe they're looking at this project here in the long term. It's atypical for them to get involved with a company and have such a significant interest in a company unless they are looking at it from a long-term perspective. And I believe that they will be with us all the way through into production or sale of the company.
Yeah, thank you. It's they're likely to be one of the big people coming in at the time when you need your next round for building your capex out. Right?
They're likely to be. Yes, I agree.
All right, thank you.
Okay, thanks, John. Steve, go ahead.
I can. Full disclosure, I'm a shareholder of Sonoro, and for anybody wondering, I ran into Ken at a conference, and he was persuading me to exercise my warrants. So he's certainly been active on that front. And I also have to say that I appreciate how hard both Ken and John work. I've seen them at PDAC, and they stand there at the booth, meet everyone from open to the last minute of PDAC every year. So that's something that I appreciate as a shareholder that I don't see as many CEOs in the business do as I do with both Ken and John. Lawrence stole my exact question, which I wanted to zero in on the specific issues of the MIA. But something else I'm kind of curious about, and I'll leave it at that, is where's the water source for the production coming from?
Do you recall on the map there, you have Cerro Caliche, and 8 kilometers to the west, there is the river coming down, the San Miguel River. And it's the main source of water for the north central part of Sonora State. And this is where, for example, the Cerro Prieto mine obtains its water source from. And there's a significant amount of flow in the river and the underground aquifer, and that's where we intend to drill our water well. We have the right to secure water from that area, and so obviously water is a rare commodity in Mexico, and there's a lot of restrictions involved in that. For example, in order to be able to secure an industrial water, you must go through a very significant amount of regulatory burden to obtain the approval for industrial water. And but we fortunately were able to secure a water supply long before the regulations changed. So I'd like to suggest that if we expand too greatly over the coming years, that we'll have to find additional sources of water, but we have enough right now for the first 10 years of operation.
Thanks, Ken.
Okay, Mickey, you're up.
Yeah, thanks for the presentation. Interesting project. Based on your PEA, the economics look good. There's a couple of things I would like to ask about. You made several references to recoveries, and I didn't look at the PEA. Tell me what metallurgy you've done and how you've done it.
Absolutely. Thanks, Mickey. We spent a couple of years dealing on the metallurgical testing at MacLeod Labs in Reno. And we've done all the column leach tests, and the recovery based upon 80% of half-inch minus was 74% in the lab. And we deducted another couple of percent for inefficiencies in the field. So 72% is what we're using in our calculations in the PEA. And as far as any further developments on the recovery is concerned, one of the things that I'm intrigued with right now is the potential if we're getting higher grades in the northern part of the concessions. And, for example, if we consistently above 1 gram, we should be looking at potentially putting a mill in that area in the future. And if indeed the grade is higher than 1 gram, hopefully even over 1 gram, then you'd be able to increase your recovery from 72% to 95%. So that's one thing to consider. But once again, I don't want to get too far ahead of my skis on that one, because let's get the results first of all before I can broadcast that. The other thing is the recovery is based upon 80% half-inch minus. Is there a benefit in crushing less than half-inch minus? And the answer was, we're going to do some additional tests to see if we can come down to 3/8 or a quarter of an inch. And but for the moment, 72% is what we have to work with until demonstrated otherwise.
Okay, so that's a 3-stage crush. Is that correct? I think you said.
3-stage,
okay.
yes.
Yeah. Okay. And then it's pretty low grade, but there's lots of mines in North America that operate at these grades profitably. One thing was somewhat concerned about, they're relatively small deposits. They're going to be multiple pits, but hopefully grow into at least your main deposit, a larger pit with additional drilling. But what are we looking at for strip ratios here?
1.6 is the strip ratio at this time. And once again, if we are able to eliminate some of the sterile ground within and surrounding the current proposed pit shell, then that's going to come down. The first phase of mining will involve several months of stripping in the Cabeza Blanca, Colorado zone. And so I would say that that particular area is probably a higher strip ratio than the rest of the pit shell material with that we're looking at here. It may be higher grade, but it's a higher strip ratio. That's closer to 2 in the first year and a half. And then after that, we come down to an average of 1.5, 1.6 strip ratio.
And that's done with a whittled pit cone, is that correct? Okay.
That's my understanding, yes.
Okay. Thank you, Ken.
Thank you.
Great. Thanks, Mickey. Doug, you're up. And then wrap us up here.
Well, at this point, I'm gratified to have been a supporter of the company for God, how many years, and I've engaged in at least 3 of your last financings, maybe more. So that's all fine and dandy, and I'm trying to figure out what can go wrong with this. 2 things: the gold price crashes, and I don't think that's going to happen, or you don't get your MIA. And it sounds like that's going to happen too. So listen, Ken, what really worries you? What can go wrong here that we haven't asked about or thought about so far? What keeps you up at night, if anything?
What worries me is at this juncture, I don't have any worries about getting the MIA. It has always been, since 2022, it's always been a case of eventually we're going to get the MIA approval. And in order to make sure that we achieve that, we as insiders loaned the company on numerous occasions enough money to be able to make the property payments, operational payments in Mexico, and so on and so forth. And at one point, I think we were up to about $7 million of loans to the company with no specific terms of repayment, and no security over the asset. And so we were comfortable with that because we believe that based upon our relationship with the regulator, based upon political people in Mexico, that it was going to come to pass. We'll get the MIA approved. So that, to me, was the concern I had a couple of years ago. Can we outlast this interminable delay that was imposed upon us? But now that I'm dealing with a regulator, dealing with the political people, and there seems to be a desire to make it work, to get through this process in a meaningful manner so that they can demonstrate to the Mexican people that we've done everything we need to do to protect the environment. Now we're going to get the jobs underway. So that's my comfort level. I don't have any qualms about that. As far as drilling is concerned, Mexico this is a prime territory. It probably we all with our companies say we're the best mining project in Mexico. That's fine. I'll continue to say that. But at the same time, it's real. This acquisition we just made, we just closed of Acuñalandia, adds to the mix dramatically, because I believe that when we were able to announce the values that are present in that extension to the east, then it's going to cast a totally different light on the entire project. So for us right now, having the wherewithal financially to be able to get to our destination, to be able to continue with drilling, I think 50,000 meters in the Acuñalandia to the east, that should be a slam dunk for us. And so continue to add to the size of the resource. And one day we're going to wake up and it's going to be a prime target for the major institutions to take a look at us. Right now, Palisades is the only institution of consequence that we have. We have, European institutions, maybe banks and institutional investors, small institutional investors, but we don't have the BMOs of the world and the Royal Bank of Canada institutions involved with us yet. We're too small still, but one day we will be big enough.
Well, good presentation.
Thank you.
Okay. Yeah, that was excellent, Ken. Thank you very much. We can let you go from here, and the group will just discuss the opportunity privately.
Well, thank you very much for taking the time to listen, gentlemen. And I look forward to, my email is ken@sonorogold.com, and feel free to shoot me a line if any questions you may have. And once again, thanks for taking the time.
Excellent. Thank you, Ken.
Thank you.
Hey, Matt.
Yep, go ahead.
I've been to this area a bunch. It's just like a bunch of roadside military checkpoints, and then Hermosillo has like a gigantic Caterpillar, tractor dealership and mining equipment. It's built for doing this stuff, and it's close to like lots of other projects like Silvercrest's, projects there over the years, and Santa Gertrudis. And it's in a good area. It's just too small. But that being said, I think it's worth a shot, because they're obviously they raised a bunch of money this year. By the way, Palisade has 8.7%. So that's what they've got in there. I'm sure they'll stick around, but they're going to dump all this money in the ground. I mean, they'll find something. It's like they're riding this belt of lots of similar projects. And I don't think they're going to find some sort of mother lode. I just think that if it gets a little bigger, it can make some news. And 20 cents, it's I don't know. I mean, they have a lot of warrants, but they're all spread out. They probably are just going to cap the stock, yes, but I mean, 20 cents can go up. I mean, it's not egregiously valued. It doesn't look like a mess. I mean, it looks like you could ride that news and make some money. I mean, I don't know what you do after that, because some of these things, like people are pointing out, they have other problems that come up later. And I'm not sure you really want to cross that bridge right now. But I mean, sitting with that much drilling going on with people that know what they're doing. I mean, these guys have done this before, similar. So they're going to have news. I don't know what the news is good. They don't know what the news is going to be, but they're going to have news. If this project grows by several 100,000 ounces, it starts to become news people read, it gets on people's radar. So, I mean, I think if this was 40 cents right now, I think it would be I don't know, I'm going to wait, but this, if they put something out that's it got bigger, it could get interesting.
Good. Anyone else, the thoughts you want to share?
I would just say that it feels like when I asked them about the market valuing it at about $50 for in-ground gold versus 85 for the sector average, he basically said that it was because of Mexico, the jurisdiction, the delays, the permitting, and then he followed that up with, but that's changing. But that's a sense thing on his part. That's not necessarily a guaranteed thing. So it feels like the bet is the upside would come maybe a double or something if Mexico is truly changing in that area in the ways he was describing. So
yeah, I mean, if they got their MIA, what would that do to the stock? You guys who've been watching this for a long time, what difference would that make? That alone?
They need more ounces. I mean, the other stuff is great, obviously, but it's not. Nobody's going to read a MIA press release and be like, "I'm going to buy that. I'm going to buy 20 grand worth of that." People. I think that's people. It validates things. Yes, it's very important. But when they say we expanded it, by this much, it's still open. It's getting bigger. It's getting significantly bigger. I think people start to say, "Wow, maybe." Core would buy it, or Nico would buy it, or I mean, maybe. I mean, who knows if they will? Probably not. But I mean, that's what makes people buy a stock, not if the water quality's been certified or something. It matters. I mean, it can derail a project for sure. It can fatigue people for sure, but I don't think it's the catalyst that makes people open up their wallet, and just go nuts.
But with
Yeah.
50,000 meters, it seems like almost certain they're going to expand the resource this year.
Well,
I mean, it's
I
an
agree.
area, it can work, you know, there's a lot of stuff there. There's a lot of tractors running around tearing up the hillside. You know, if you go down there, you'll see, you know, it's probably there's about the same amount of gold we all expect is up the hill.
That's
I'd agree with VB. I think the 50,000 meters is really, that's tremendous. They when I first started talking to them at the start of this company about 8 years ago or so, it was about a couple 100,000 ounces, about a half a gram, you know, really, really small. And they've, you know, to their credit, they've stuck through some bad markets and got that financing. I am curious, Brent, they really didn't answer your question about where the, you know, the 14, $15 million went over the last few months. You know, if they're down to 11 and they raised 27. But I think that 50,000 meter program is very likely to get this thing close to 1 million ounces. And that's when the market really starts to pay attention.
Brian,
It's pretty
it say
simple.
he made a $5 million payment.
Yeah, still leaves a lot of money to
Administration.
Well, maybe it
Yeah.
was settling the debt that the insiders had lent to the
Exactly.
company, which you talked about.
Yeah.
Yeah.
We don't want to know all the details, Matt. You know, let us pretend like, you know, it's furthering the advancement of the
Well,
project.
as long as that 50,000 meter program is paid for or will be paid for, I think that's, you know, that's the key. That's a lot of drilling. They've been straight shooters throughout the years. I'll give them that. You know, they give you straightforward answers. He and John Darch, they, you know, they don't beat around the bush. If you have a tough question, they give you the tough answer. And they persisted. And, you know, I think after this drill program, I think they're really going to have something here. You know, there's a bit of hair on it here and there with the warrants, with the share structure, et cetera. But, you know, the valuation's there, and they're going to, I think, prove out some ounces in a fairly good locale and in an improving political environment and a good market.
Yeah, I'm afraid I'm less enthusiastic than you guys. Their plan going forward strikes me as really aggressive in terms of when they're going to put this into production. The 83 million capex to do all this strikes me as low. I'm impressed they can put in a leach pad in the middle of the Sonoran Desert for what, $4 million, when it costs $14 million to paint a pool in Washington. So, and in terms of the exploration upside, we don't know anything about really the veins they're talking about drilling. What we know is the veins they've got that they've drilled out, which are rather small, limited, narrow veins that are not, you know, scattered in 5 pits right now. So we don't know much about the exploration upside on those veins, except there's a bunch of probably skinny, ratty veins scattered across the countryside. My sense so far with, you know, my experience with people starting off with a small mine and building it into a big mine and exploration from there is most of your time and money is spent fixing issues with a small mine, which is what they're probably going to end up doing. And if they are successful with finding some higher grade material scattered around the hillsides, and what they built is too small to handle it. So that's my take. I mean, Ken's done a great job. He's done good in the past, but this just seems like too much unknown and scattered thinking going on.
I agree with you, Brent. I also think that considering the share structure, he hasn't been able to track the capital that I would personally want to see going towards production. You know, to have that many warrants out, the lack of high-end institutional ownership, I think speaks to the confidence level that he's able to instill in the investors and whoever he's pitching. And so that would be a big concern from my part. And I do think that the share structure, that the warrant overhang could cap especially in this sort of sideways, maybe even downwards market that we're in. It's one thing if it's the market of January, I would say, heap leach, open pit, especially if the drill program works, you've got plenty of runway. But I think in a scenario like this, it could act as a big cap. And yeah.
Oh, I will agree with both Brent and Brian regarding their issues. I think my main issue goes back to the current geopolitical climate in Mexico. You have a president who at best is a socialist and at worst she is a communist. There could be very many delays in the new permitting regulations. There's been one open pit gold mine permitted in Mexico in the past decade or so. Now that was in the fall, with known mining people, Silver Tigre people who've mined in Mexico before. So to me, that's the real risk, besides a share structure that's basically blown out right now, in my opinion, with what I think I calculated 160 million 3-year warrants that the highest is priced at 34 cents.
Okay.
Yeah. I've got, hi, gents. I'm just sort of echoing what you guys are saying, really, but I've got some issues with the country, with Mexico. I've just seen so many things go wrong, and it's just the permitting process is endless. I've got some issues with the warrants. I've also got some issues with the market generally. I think we're in a bit of a bear market at the minute, and I just wanted to discuss the share price itself. I think the persistence of that management is to be admired, and we really saw that in the last kind of bear market. That stock just ground, it just ground lower and lower. I've looked at a 10-year chart. It was actually over $1 at one point, and it went all the way down to 4 cents a couple of years ago. And then from 4 cents, it's gone all the way, I think, to 40 cents, maybe just above 40 cents. So it had a real 10-bagger of a 2025 that had a bonanza year. And now we're the share price is halved, and it's, you can't argue with a downtrend, and the trend is the trend until it ends, and it's just trending lower at the moment. And when you consider the country, the warrants, the funding issues, and all the potential technical problems on top of that, I just think it's not a difficult one for me at least, to pass on at the moment. And it seems to be one that overshoots on the upside in a bull market and overshoots to the downside in a bear market. And, I'm not saying I don't like the company, but I don't like the company in this market at this price, if that makes sense. But I admire the persistence of the management all the same.
Okay. All right. Anything else someone wants to add?
On the positive, these guys have a track record in Mexico on multiple projects for many, many years.
And
yeah, you can't argue with that.
And there's the other side of it, as kind of EV brings up, which is just whether or not this actually turns into a mine, whether or not all of the issues that they have to face down the road, where it's priced now, it's not exactly, super expensive. And so there is potentially upside just in that. If they do come out with this good news from the drilling program, which is massive, and which he seems really confident about, and he seems otherwise, very, straight shooter. So he has some more information than we do, and he seems very enthusiastic about it. And that could be a big driver for the stock, it seems to me.
I agree. And, I've seen way worse stories than this. It's just not a scream for me at the moment. It's not a screaming buy. I've seen far worse.
Yeah, I think we all have.
But we all get, what bear markets are like. You just suddenly get really defensive, and the animal spirits, your cojones get cut back a little bit.
All right. Okay, guys. Well, I guess we'll wrap it up there. Thank you again for attending another one of these and participating. I really appreciate it. And we'll see you next time. All right.
Thanks.
Take care,
Cheers,
guys.
gents. Thank you.